Hi everyone, today we're going to be talking about, is there going to be a stock market crash in June 2020? Now it only seems a few weeks ago I was talking about, is there going to be a stock market crash in May 2020? But it looks like the stock market has kind of carried on in this uptrend of positive days where there's no sign of pulling back, which is definitely adding to the fear of what is going on in the stock market right now. Any kind of bad news that's been thrown in this stock market, it's kind of brushed it off and it's carried on ploughing far ahead. And I've kind of actually got to the point now where I'm like, it could actually turn out that US is about to drop a bomb on China. I reckon the stock market will still be up 2% for the day. The stock market has kind of gone a little bit crazy right now, and it's kind of one of those videos where I feel like I need to touch on this again, and if we're going to have one of these stock market crashes in June 2020. Now I am always going to say this, you can't predict where the stock market is going to go. It's the hardest thing to do. You've got kind of a 50-50 chance, or kind of slightly a little bit more depending on what's happened with the stock market and what kind of scenarios are out there, like what is currently happening right now. But even though I feel like there's a bigger chance of a crash than the stock market going up from here right now, there's a chance the stock market goes with that lower possibility where the stock market just carries on going up and up. And that's why it's always important to dollar cost average in, so buying them positions low down and buying in those kind of dips, because you don't know how low the stock market is going to go and you don't know how high the stock market is going to go. But at the same time, if you kind of look at the stock market and go, what is going on? Are these actually good prices? Is this kind of, a fair value for your risk to reward kind of standpoint? And that's what we're kind of going through today. Is the stock market in our favor to start buying heavy, or is the stock market more in a position where we should slightly go a little bit lighter and kind of build up that cash pile in case there is another dip? So just to put this into context right now, when we look at the FTSE, that's probably the one that stands out to me as not being as ridiculous as what other kind of indexes are right now. The FTSE is currently down 17%, the S&P 500 is down 9%, and the Nasdaq is pretty much flat for the year, which is absolutely bonkers. So the first thing is that we've had an economy shutdown. Obviously we've had the COVID-19, but now we've actually got to a point, or we got to a point where the economy actually just got shut down. Now that has never been done before. The economy has never been shut down. Previously in recessions, we've had recessions where obviously it's affected the economy absolutely massive, but things are still ticking over in the background. We actually got to a point where everything just went to a standstill. So that kind of says that we should have had a stock market that pulled back more than what should have ever happened before. We never had an economy which has just halted completely. So that's one of the big things. We've gone through an economy that has completely shut down, and we've only kind of got to a point where the stock market has started to kind of recover that, and we're starting to see things opening up. We know we're back to the point where we were at 2019, and that thing is absolutely huge that we've seen the economy absolutely slow down right now and completely shut down in that case. Now the next thing is the earnings. Obviously, like, a lot of the earnings have been pretty terrible. There's been some okay ones out there, but for every kind of 10 bad, one good earnings, you've had 10 bad earnings. So the earnings have been absolutely destroyed. So to have stocks kind of trading at prices where they were kind of pulling in decent profit, decent revenue, which they aren't doing anymore, and they're trading at the prices they were doing pre-COVID-19, early January, February time. It's kind of crazy because a lot of these earnings have fallen apart, so even the earnings and revenue isn't strong enough. And when we actually look into Q2 earnings, which will be coming out about a month's time from now, 2 months time, they're actually going to be worse than what the Q1 earnings are. So we have no idea what the worst impact is yet on the economy from these earnings. So the worst earnings are still to come out, and they're going to be worse than Q1, which is the scary thing. So we haven't even got to the worst earnings yet, and the Q2 earnings could be the signal for a stock market pullback. Now, as well as earnings being absolutely awful, we've actually had balance sheets actually take a turn for the worse. So a lot of these balance sheets now are coming on with a lot more debt than what they used to, because they've had to raise a lot more cash. As well as that, they've actually had to burn through the cash pile that companies have had. So a lot of these companies that have had decent cash have burnt through it. So we've had earnings that are nowhere near in a strong place right now and nowhere near 2019 levels. We've also had balance sheets that aren't exactly the same, and some of them balance sheets are going to take years to recover. We've also had employment absolutely shoot up as well over the last few weeks. So employment going up means that people aren't going to have money. People are going to be a little bit more defensive on spending that money. And if people aren't having jobs, they're obviously not going to spend into the economy. So we've had a very high spike in employment level, and that's also going to change the outlook of what's happening in the economy right now. Just to add to it all, we've had the China trade war kind of spike back up. A lot of that to do with how who have handled it. Donald Trump obviously wasn't happy with China previously, and this hasn't helped things. And previously, the stock market in 2018 was at pretty awful stock market. And that was only with just that one thing going on, a China trade war. We've obviously got this now added in, as well as the other problems. As well as that, we've got the unrest in Hong Kong. So we've actually got two China problems going on right now. And 2018 was a pretty awful year really for the stock market, maybe into 2019. And the stock market was a pretty not as good performing them couple of years because of all this that's going on in 2018 because of the China trade war, and that's kind of come back up now, which is kind of worrying. And also the added in of the Hong Kong side isn't a great thing either. And just to add to all of this, we've now got a lot of rioting breaking out across the US because of the George Floyd situation. Now I don't want to go too far into that because I don't want to be political on the channel, but obviously that isn't great, and obviously what I've seen out there is only going to add to the unrest of what's going on with these riots, and it doesn't seem like they're going to kind of stop anytime soon. But like I say, I'm not going to get too political on it, but obviously that's going to damage the economy as well with what's going on there. Now with all this said, I am generally a bullish guy. Like, you ask me what happens in the stock market, I always say the stock market recovers 100% of the time. The stock market's been through 2 world wars, it's been through a big massive terrorist attack in 2001 with the World Trade Center, and it managed to get through all of that. It's been through the Great Recession, and the stock market has still come back through that, and I do believe that it will get through the COVID-19. Now all I'm going to put through this is that some of these problems, even just like you take the China trade war for example, that was something that really affected the stock market in 2018 and actually led the stock market to go down quite a bit in 2018. But that was just one thing. Now we've got all these major things and some things that would never happen before, like the economy completely shutting down, and the stock market is only down slightly, and in some cases it's even flat. So you've got to kind of look at all these things that are going on in the background and say, should the stock market be trading at these sort of prices right now? And even though the stock market is future thinking, maybe 3 months ahead, we're kind of at a position where things are only starting to open up. We don't exactly know what's going to happen with the spike. If there's going to be a spike in coronaviruses, we don't know how quick the economy is going to recover. Like I said, the worst impact isn't even aware to us yet because we haven't seen the Q2 numbers. So I would say that we shouldn't even be trading at these prices until after like July time, but probably even longer than that. I don't think I was going to see these prices where the stock market is at for like quite a few more months yet. So these prices, when you look at it, should we be trading at the kind of prices that we're at where there weren't all these problems only a few months ago? No, we should be a lot lower. So for me, I can't buy at prices where I'm looking and thinking there's all these problems going on, and I'm buying at prices which the stock market was at only 3-4 months ago where there was none of these problems. Sure, there might have been the China kind of tensions a little bit, but it wasn't as bad as what it is right now. It's worse now than what it was a few months ago. So you say to me, is the stock market at fair value or undervalued at prices it was only a few months ago, and it's got all these problems now and it's traded at these prices? It's stupid, and this is why I can't invest in the stock market right now, because there's all these different things that are playing up in the stock market right now, and the stock market's totally brushed them off right now, and kind of it's traded at prices it was only at without these problems a few months ago. So for me, the risk to reward is just too much here, and I just can't be buying at these prices because there's just so many problems out there that in my opinion the stock market should be trading a lot lower than this right now. So I'm going to wait for the stock market to go hopefully lower, and that's where I'll start buying my positions. I mean, I benefited as well because I did buy quite heavy in the correction, so I'm not in a position to get like FOMO like a few people are right now and get that fear of missing out. I'm kind of happy with what I've bought in the correction, but at these sort of prices I'm looking at the stock market and going, these valuations are actually insane. You only have to look at the S&P PE ratio to see how high it is right now. I mean, that should even be a lot lower than what it is right now. So for me, there's so much here that proves the stock market should be lower, and it's just kind of brushing it off right now. But eventually I think it will catch up, and I do believe that we should have something like a 10% dip on the stock market, and then that'll be a lot fairer prices for what's going on right now. So I thought I'd update you with what I think about this June 2020 crash and where I stand on it. Like I say, I definitely need a pullback right now because these prices are just too much for what's going on with all this risk that you would take on. So that's kind of my opinion overall. I hope you enjoyed the video, guys, and if you could like it, that would be absolutely amazing. If you could subscribe as well, that'd be super, and I'll see you in the next video.